Hey guys, welcome back to the channel. My name's Nathan Robert, and we're going to be looking at 3 dividend stocks that once you buy them, you never need to sell them. These are that high quality of stocks, and you can just let their dividends keep snowballing up because a lot of these have very high dividend growth rates. And all these companies that I'm going over, I do own here, so I might be a little biased. But if you like this kind of stuff, please drop a like on the video for me. It'd greatly help me out. And let's get straight into the video. So the first stock I think you should buy and never sell easily is a McDonald's, and they're one of my largest holdings. If I scroll down here, I have $4,100 in this stock. We're up 16% on them, but this company has one of the best charts I've ever seen for a blue chip stock. In the year 2008, the stock didn't even dip. If we head over to the stock analysis right here, we can see they have a free cash flow yield of 3% and an earnings yield of a 3.56%. The dividend yield's at 2.2%. They rose their dividend for over 50 years. So McDonald's is officially a dividend king, and you get $1.77 per share back a quarter, which is pretty crazy. So my position right here, my $4,100 pays me $24 a month, not assuming any growth. So right now, if you buy 13 shares, that'll pay you on average $24 a quarter. Sorry, every time they pay you, they pay me $24 a quarter. Hey, that buys me a couple meals at McDonald's though, but they're such a recession resistant play. Like actually in a recession, McDonald's does good. People move from the more expensive restaurants to the cheaper McDonald's because McDonald's has really good prices on their food, especially right now after the McValue menu. They've been an innovative company, like they're actually partnering with the Minecraft movie. It was huge, like billions of free views of advertising for McDonald's and the Minecraft movie. A lot of people think McDonald's is just a restaurant, but they're actually a real estate and royalty company. McDonald's, whenever you go spend $100 at a McDonald's, 4% of that, so $4 of that, goes back to this stock right here as a high margin royalty. They have a sales royalty, and they also, for 80% of their stores, they own the real estate under the McDonald's, franchise. So they own the land under that, and every franchise is actually a tenant as well. They pay rent back to the McDonald's corporation, this stock right here, and they raise the prices of the rent as well. So they have a $50 billion real estate portfolio. If they were asked to convert to a REIT, a real estate investment trust, but they chose not to, and McDonald's pays a qualified dividend. Still a nice yield, 2.6% dividend yield, 50 years of growth. I mean, no, very few companies have that in this chart. And the chart looks this good right here. But if McDonald's were to convert to a REIT, a real estate investment trust, they would be in the top 10 largest REITs in the world. Well, which it sounds crazy, but not really, because McDonald's is a $220 billion company, top 50 US companies. So anyway, that's McDonald's. Let me know what you think about this one. I mean, you should just get 7 to 8% returns a year, 2.5% from dividends, 2.5% from stock buybacks, and 2% same store sales growth. So anyway, that's McDonald's. Let me know what you think. And let's hop into the next dividend stock that I believe you should buy and just never sell this one. All right, so this next dividend growth stock I actually own in my Roth IRA in my Robinhood portfolio. Again, my Roth IRA is only $1,000. I'm trying to deposit more into here. So far, I've deposited $500. In 2024, I did 500, and here's 500 this year so far. But anyway, the stock I want to go over is such a high quality company. Another recession resilient stock right here. If we go into a recession, and there are some fears about that, but a lot of the recession fears are going away. But in case that does happen, Kroger is a grocery store that people still got to buy groceries from. And same with McDonald's. The thing is, they do good in a recession, and when the economy is booming, people will still go to Kroger even when the economy is doing good. So it's kind of like a good stock to own for both environments. It's a good stock to just hold forever. That's what I'm saying. So anyway, this is Kroger. You won't believe how great of a dividend growth company this is. So check this out. Free cash flow yield of 4% and an earnings yield of a 5.6%. So they make 5.6% of $46 billion every single year in net income. And they return 1.84% of that to you in a dividend. So you get an near 2% dividend with this stock right here, and they have 10 years of dividend growth. They're not a dividend king, but they have a very low payout ratio, a 34% dividend payout ratio. They actually have a lot of room to raise. They're already pretty high, 1.84% dividend yield. But check this out right here. This is what's so impressive. Look at this shares change. Yeah, so check this out right here. Kroger is a buyback machine. There's only 691 million shares. They just bought back a huge chunk of the company in the most recent quarter because they were going to acquire Albertsons, but then the deal didn't go through and they had a bunch of cash stocked up. So since they couldn't acquire Albertsons for like 7 billion or whatever it was, they spent it on share buybacks. But they've always been a shareholder friendly company. Look, there was 780 million in 2020 and look how it just trends down every quarter. 780 all the way down to under 700 million. That's pretty impressive. And that's also with the shares outstanding diluted. So even on a diluted weighted average shares, under 700 million. So such a nice company. The valuations were so cheap here, a 19 PE. The forward PE is a 14.6. So that means they're expected to grow their net income. So that means the payout ratio is actually like a 28%. Yeah, if the net income's growing that much, that lowers the payout ratio. That means they can buy back more shares and do more dividend raises. So Kroger, in my opinion, they haven't even done that good for a grocery store. Look at them the past 5 years. They're up 115%. If we compare that to like a Walmart, for example, they haven't done quite as good as them. Well, actually, yeah, Walmart's up 130. We can look at a Costco as well. But Costco and Walmart are obviously the industry leaders. Yeah, Costco's crushed it. Wow, they're up 243%. So actually, I don't know what I'm talking about. Kroger has actually done pretty well in the 5 years. So this is a grocery store stock I'm fine holding for forever pretty much. I have it in my Roth IRA. No reason to sell out of them. And you get that recession hedge. If we do go into recession, the grocery stores do pretty decent. Same with McDonald's, the real estate company, they still collect that real estate rent if we go into recession and the royalties. But anyway, let's get into this final stock. But I just want to say thank you for being here. Please drop a like if you made it this far in the video. I actually made this exact video 2 years ago. It was one of my first ever YouTube videos. And check this out. My portfolio at the time, it's right now 23,000. We're up 2.61% year to date, but we were at $11,000. And these were the stocks that I owned at the time. I don't even think I own any of these anymore. I had Union Pacific and a few other ones below that. But this is still on my channel if you want to watch it. It's such a bad video 2 years ago. But anyway, my portfolio has changed quite a bit. I just like being completely transparent. If you appreciate that, I'd appreciate if you subscribe. Here's my total return on every single stock in here. So we're down on United Health. That's our big loser right now. Looks like the market is trending a little bit red right now. We're at a new intraday low. But anyway, let's get into the third and final dividend growth stock. All right, guys, so for this last and final dividend growth stock, I believe this one's going to be a dividend growth behemoth. And you got to hear me out on this one, though. This is ticker symbol Goog. We've all heard of this one. This is Google. I don't have a huge position in them, $3,100. I'm only up 2% on them. Google's been hit hard year to date. They're down 13%. But here's what you got to understand about Google. Here's why I think they're going to be a dividend growth behemoth. So check this out. The dividend yield right now is a 0.51%. But check out their earnings yield. This is what's crazy. So they have a 5.5% earnings yield. So if you bought the entire company of Google for $2 trillion, you get 5.5% of $2 trillion of net income, after tax net income every year, which is crazy. So you get a 5% return of net income a year here and a near 4% free cash flow yield. But here's what I'm trying to say. Look at this buyback yield. Because this earnings yield is so high, they bought back 2% of the entire company just in the past year. And as we know, they pay a dividend as well. Here's why I think their dividend's going to grow to if you buy this company now, in 5 years, 7 years, you should get like a 3% yield on cost. And here's why. If we look at their payout ratio right now, it's a 9%. And again, that's just going lower and lower because their net income is expected to grow. But the payout ratio is literally at 9%. They're spending 4x on buybacks than they are on their dividends. So they're returning to you right now 2.56% a year, 2% in buybacks. They could easily switch from doing buybacks to dividends with that money. And that's what's going to happen one day. They're going to turn into like a McDonald's or like a Cisco or something, in decades or something, where they're going to have a 50% dividend payout ratio. And when that ever happens, the yield here is going to be a 3%. They can afford right now. They could easily afford to raise their dividend to a 3%, but they just choose not to. They instead choose to do buybacks and reinvest in the company. That's what I love about Google. They're such an innovative company. They own YouTube that we're watching this right now on. They have their own quantum chip. They have Waymo. They have their own TPUs. They're not GPUs. They're pretty much GPUs, but they call them TPUs that they use and they sell, which is pretty crazy. They have the Google Cloud business, which is growing like crazy. DoubleClick, They own the Google Play Store, where they have the high margin transaction fees, kind of like Apple's App Store. So Google is just such an innovative company. But anyway, if you found value in this video, don't forget to drop a like on the video. And I think this last video will really interest you. This is every single stock that I own in my portfolio. This stock portfolio right here, my Robinhood, is only one of 3 portfolios that I have. So if you want to see the other half of my portfolio, please check out this last video up here. It'd mean a lot to me. Hope you have a great rest of your day. Please don't forget to subscribe, and hope you have a great rest of your day.